When you're looking to purchase a home and looking at the different loan types, the most common loan type people talk about is the 3.5% down FHA loan. But did you know there's a 3% down conventional loan? In this video, I will be breaking down what you need to know about the simple requirements for this 3% down conventional loan and why it might be the best option when you're purchasing a house. The 3% conventional loan is often referred to as a conventional 97 because with a 3% down payment, you are at a 97% loan to value. Just like any other loan type, there are some requirements that you must need to get this loan. First, your credit score must be a minimum of 620, which I think is quite a bit higher than other low down payment options. You also must be able to show reliable income and employment. Finally, your debt to income ratio must be below 43%. Unlike some of the higher down payment conventional loans, conventional 97 does require that you live in the house as your primary residence. You can't use this loan type to buy an investment property. No, they won't take it. Your mortgage also can't exceed that conforming loan limit. And I don't want to confuse you by that. I will be talking about that in just a few minutes. The closest loan type to a conventional 97 is the very popular FHA loan. The conventional 97 requires 3% down. The FHA requires 3.5% down. This depends on the property. The conventional 97 with no income limits will only allow you to buy a single family home. No duplexes, no triplexes, no plexes whatsoever. Only a single family home. Whereas the FHA loan will allow you to buy any home from a single family all the way up to a fourplex, as long as you're living in one of that fourplex units as your primary residence, or let's say a duplex, if you're living on your one side as your primary residence. Now I have to put this out there, this is a disclaimer, there are 3% down conventional loan variants that will allow you to buy multifamily properties. And with that said, they do come with income limits and other qualifying criteria. I am not going to discuss those types of loans in this video. With a 3% down conventional loan, you can get a loan for just $548,000, while an FHA loan caps at just at $356,000, so that is almost a $200,000 difference. The conventional 97 requires a 620 credit score. This is much higher than the 580 score required for an FHA loan. With a conventional loan, you pay private mortgage insurance every month until you reach 80% loan to value, or 20% equity built up in your home. Once you reach that 80% loan to value, that mortgage insurance can drop off. It is essential to note that the amount you pay in mortgage insurance, your mortgage insurance rate, is inversely proportional to your credit score. The lower credit score, the higher mortgage insurance you pay, and vice versa. If you have a good credit but modest savings, if you want to cancel your mortgage insurance as soon as possible, or if you're looking to buy a property with more expensive than that FHA conforming loan limit will allow, the conventional 97 could be a fantastic opportunity for you. In today's very competitive real estate market here in Lane County, sellers are way more likely to accept a conventional loan because of the higher credit score required and the fact that they can close so much quicker. If you are drawn to an FHA loan in this market because of its low down payment and know that your credit score is above a 620, I want to encourage you to talk to your lender about the conventional 97. It may be a better deal for financing your home purchase. Let's talk about what appraisers look for when they're appraising a conventional loan compared to an FHA loan, which you can watch my FHA appraiser video that I just put out last week. Most of the appraisers on a conventional loan will be looking at the overall condition and quality rating that is selected by the appraiser that best reflects the property as a whole and its entirety. This means the appraiser will be looking at roofs, overall condition, Are there any active leaks? Is there curled or cupped roof shingles? Is there any exposed electrical or inadequate electrical? Also, plumbing fixtures. They will look at the home's foundation to make sure there's no water seepage or settlement that disrupts the foundation. When I'm walking around with my clients, I use the rule of thumb. If the crack in the foundation can fit my finger into it, I am not a foundation expert, so we need to call in a professional foundation expert to come look at that foundation before we move any farther. If the crack is wider at one or several vertical cracks near each other, there could be possibly foundation issues. And there's more ways I can tell you about seeing if the home has foundation issues, but I won't get into details in this video. I do hope this video helps you understand the conventional 97 loan and what an appraiser looks at when they are doing a conventional appraisal. Make sure you hit that subscribe button to keep up with more tips, tricks, market trends, and fun things to do in the Lane County area. And have a great home buying and selling day.